Okay, perfect. So we're recording now. Hope everyone's having a great Friday, like I said, and hope you had a good week. It's been a pretty roller coaster of a ride this week. But I mean, it goes without saying. We knew that there was a lot of red folder news. We had FOMC, PPI. I think it was PPI today. Unemployment claims yesterday, which is kind of uneventful. But today was PPI, and it was pretty. There was actually a nice sized data candle. I'm not sure if anyone knows what that is, but I'll just quickly explain what it is because it's a pretty important concept. Now, we know this thing starts at 8:30. That's when the news drops, right? So let's go to 8:30, which is about right here. So this is NQ, and the data candle is basically the 1 minute candlestick that prints. So you have a high here, which I have marked here now as data high, and then we have a low here, just marked as data low. And the whole point of playing a data candlestick is you're looking for one end to get swept, and then you're targeting the other side. Doesn't always work out, and in terms of the data candle, in terms of the size, we're looking for something like exactly like this. You want something that's over 100 points. We don't want anything that's like 46 points, like unemployment claims was like that yesterday. We don't want anything like that. So, but just showing you what it was. Now, typically with a play like this, we'd want that sweep to happen, well before New York Open starts, because as we start approaching New York Open, that's when the probability of that type of a setup becomes lower, and a little in terms of like risk, it becomes very risky. So we got lots of consolidation here, nothing to really work with. But just showing this to you, I highly recommend if you're more interested in this kind of stuff, go check out previous data candles. So like CPI or NFP, just go back and check those dates out and look at these candlesticks. And I just ask you, like, go to the 1 minute and observe how price moves, because typically, this kind of stuff is normal too, but typically what we'll end up seeing is like a very quick sweep like this, and then price immediately goes to the other side, or it'll start here and immediately go to the other side, and it's a pretty quick play to get. And like if we're talking like a data candle that's 100 points, like you could potentially score a 100 point trade, take TP a few times along the way, and your trading is actually done for the day even before 9:30 hits. And I'm not gonna lie, that's happened to me many times. So this type of play is pretty cool. Of course, it doesn't happen all the time. There's only so many key red folder events, but like I said, go check out the history of that. It's pretty cool. So yesterday I did a live stream on I did a live stream inside the 2 Degrees public Discord. If you don't know what the 2 Degrees public Discord is, 2 Degrees have probably some of the best premium indicators on the planet. I met these guys last year, probably in the summer, and there was an indicator called the Stat Map, but they ended up dropping another indicator, which is the IFVG Pro Plus indicator, which you can probably see on all my charts. It's always there. But I really discussed it in full yesterday. That live stream is uploaded into my live stream thread, so check it out. But just to give you guys a quick heads up, they have a discount running for 20% off. So, click the link in my bio. And if you want to try out the indicators, they're there for you, okay? So check it out. Other than that, this was the deck I used yesterday. If you want to know more about what I was talking about, it's a lot of what I've talked about in these AshCap Discord live streams, except I really, really went back to the basic of like top to bottom of everything that I do when I show up. Obviously, I show you guys this every single time we chat. But if you want more of a standalone recording or replay of specifically these types of things that I'm doing, check out that Livestream, save it, and check it out, because I went into pretty much everything. So today, and yesterday, actually, I discussed yesterday those trades I took yesterday on that live stream. So check those out for yesterday. Let's talk about today, because today was potentially pretty interesting, and then obviously as the day goes on, it's less interesting. Excuse me. Now, what I'm going to show you are two trades that I took, and then what I'm going to do is I'm going to show you kind of some discrepancies that I noticed between like a unicorn model versus an IFEG model. Now I know Matt trades the unicorn, and the unicorn's brilliant, right? Like I just showed you the SI trade. Like this is a brilliant unicorn. I think it's super important to understand and be able to know when one prints. I think it's super important. But in terms of like an entry trigger, obviously you got to do what's best for you. And I'll explain to you why I prefer the IFEG versus the unicorn. Specifically today, it was a great example. So I'm just going to hit rewind here for a sec. And I'm just going to go back to 9:30. So this is our open. First thing I'm always doing when I'm on a chart is I'm marking off my highs and my lows, the ERLs off the H4. I'm marking them off on the H1. So but for the sake of what we're doing right now, I'm just going to let this thing play out for a sec, and then that actually rewounded me. Okay, one sec. Basically, I'm trying to show you the first trade, which was basically off of the Asia high. So it was right about here. So first thing I'm doing when I show up to the chart, of course, is I'm looking to see where the daily EQ is. A lot of people use, the daily bias, meaning they'll use the daily bias itself. Like they'll go to the daily, they'll look for an internal range liquidity or external range liquidity and see where price is moving. For me, I found that a little bit complicated. And there's a lot more interpretation that's needed, and a lot more, I think, intuition with what's happening, right? Because like if you look at this right now, like what would your daily bias be? Looking at something like this, would it be bearish because we've swept a bearish FEG here? So then we're looking for like an internal to external type move, right? Is that the idea? So. Or are you leaning more bullish because of the way this wick closed? Now, granted, that's not have anything to do with, like, there's no IRL in here. There's one small one here. So, I mean, things can get a little bit tricky because you don't know what price is going to do. So, for me, what I do is I just eliminate all that, and I just look at where the daily EQ is located at the open. So, when the market opens, if price is hovering above the daily EQ, well, I'm going to have I'm going to have a bearish bias. And if it's below the daily EQ, I'm going to be looking for longs. And if I have something like this happening where it's consolidation, well, that basically means I have a neutral bias until it picks a side. So what I do know is that we have Asia high up here. And I'll just quickly mark that off because some of these levels that were just overhead were very important today. Mark that off. Asia high. We'll also mark off London low. London low right there. And the only other one I'll mark off is the data low candlestick, because that is also another key level of liquidity. Data low and data high. All right, so at the morning open, this is what we got. So you got to set your alerts. That way you don't miss anything. So alerts are set on all these levels. And with trading, it doesn't have to be so complicated. Like you're seeing what I'm doing. Like I'm not even really using, I'm not even doing multi-time frame analysis really. I'm just marking higher time frame levels, and then I'm zooming in lower, and I'm waiting for price to tag those levels. And I'm looking for my execution model, right? The trigger. I'm looking for an IFEG with momentum. and I'm looking for a strong reaction, right? So I have my checklist right here. Majority of these are always going to be swept because it's pretty mechanical, right? Like I'm, of course, trading in the New York kill zone. Major liquidity sweep, well, those levels are marked, so if it gets swept, we know it's a major liquidity sweep. The daily EQ gives me my premium and discount, so of course I'm going to be aligned with that. So these three are pretty easy to always get, like, to be right. Like I can never break those at this point. So what that means is, like, these bottom three are the very key components that I have to keep an eye on. So I'm looking for, instant reaction. I'm looking for strong momentum to confirm that IFEG, right? Instant reaction just means, like, I'm looking for, like, if price were to go to the Asia high, like, I want to see an immediate reaction, right? And then I want to see strong momentum confirming that IFEG. The clear drawn liquidity, well, the liquidity could be, in this case, if we go higher, well, the liquidity is the data low, for example, the daily EQ. We can see the daily EQ has been holding an amazing, SR level, really, throughout the day, which is pretty amazing. I always talk about the daily EQ being an important level. You can even take longs from it, which I'll show you what I did today with that. And then in terms of the London low, there's another clear drawn liquidity. So the liquidity levels are there. We just now need to wait for instant reaction and strong momentum. So at open, I'm literally just waiting. So another thing with open, and I noticed this with some other traders. I know Matt took an ES unicorn long today, and I know that setup looked like it formed prior to the open. For me personally, I like to wait a little bit after open because you get shit like this happening, and you can't trust it. It's just too much volatility, and as a trader, you're trying to put yourself on the right side of higher probability setups, right? Like, you don't want to be putting yourself into lower probability setups, right? Because otherwise, you're gonna hit stop loss. You're gonna get manipulated and wicked out of your position. So you just have to be careful in regard to that. So I waited to see what was going to happen. It was an amazing opening candle. I mean, this thing ran almost 100 points at open. This is a 1 minute candlestick, and the open was 95 points. I'm trying to take trades that are moving 100 points, and the 1 minute candlestick opened with a 100 point size almost. Like, that's insane. And then the next candlestick went the complete opposite way and turned around. So we are having very, very volatile days. Wait for clarity. Wait for clear price action to show you something that is like 100% A plus. And you know what I'm talking about. Whatever system you're trading, you should know what A plus is. And if you don't, then you need to take some time to figure that out. Because if you're not taking A plus setups, 8 out of 10 times, then you're putting yourself at higher risk, in my opinion, of, having a losing trade, basically. So anyways, I'm waiting to see what's going to happen. We're back at equilibrium. But what I'm noticing is, look at the respect off the daily EQ. Absolutely crazy. Crazy respect. Okay, so then we get something like this happening. Now, we've swept an hourly high here, right? So there's an hourly high right here. This is the beauty of why I like this IFEG Pro Plus indicator, because when IFEG start forming, it signals me, it puts the levels on there for me, so it makes my life a lot easier. But you notice that there's a setup here. Now, I always talk about how you can't just trust an indicator blindly, and if it shows you a short or a long, you just jump in and take it. Like, you can't do that. You got to be smart. You got to have, like, trading intuition. You got to stick to your plan. So even though I know price swept this hourly high and then it's printed a lower high, and then now we have a beautiful IFEG here, the thing that you got to remember is this daily EQ has been holding support and resistance like too well today. Okay? And the thing is, when you see a candlestick do this and literally just look at that. Look at the response off of the daily EQ. It literally bounced off of it. Okay? I'm not entering short here. No way. I also don't like to enter into longs or shorts that are literally too close to the daily EQ, because what ends up happening is this. Okay? So save myself a stop loss, simply following rules, simply following intuition and understanding of how valuable this level is. I'm telling you, not a lot of people use this. Okay? I don't even know if ICT users are using this. But I highly recommend for you to put this on your chart. If you don't know how to put that on your chart, there's two ways you can do it. The first way is the easy way, which is just add this indicator to your chart, no duplicates, interval, range, and EQ. Check everything off, only keep the daily EQ. That's it. The second way to go about doing this is this is more of the mechanical way of doing it, like the manual approach. You're basically just taking the high and the low of the day. The day starts at 6 p.m. Eastern time. So that's about right here. Okay? And all you're doing is you're just taking the high and the low, and you're using Fibonacci, and it gives you the daily EQ. So if I pull up Fibonacci, just to show you my levels, you just want to have the 0, 50%, and 100% levels activated. And then all you're going to do is just take the high and the low. So the high is right here after. So it's not this. It's going to be after this 6 p.m. Marker. So here's the high, and then we can see the low has been printed in Asia, right? Or sorry, excuse me, in London, like that. Okay, and that's basically it. Oh, it moved. There we go. Did I get the right one here? Let me just double check. Yep, looks good to me. Looks like there's a slight discrepancy, but nonetheless, that is the level right there, okay? So, and then that gives you your daily EQ. That's the more manual way. I like to use the indicator because it will move as price makes new highs and lows, which is really good. So anyways, back to the chart. In terms of the setup, avoided a loss here. Don't want to be shorting into the daily EQ. I'd rather be shorting, like, if price were to have done something more like this, right? Like, let's say, so something like this, where price had already come lower. So I want to see price go up, and then I would like this, right? And then my IFEG's here, and I'd be looking to trade lower, right? Into the data low, something like that, right? But I don't want to see price flipping this into support, right? I don't want to be shorting above it. Even though my bias says to short above the daily EQ, the thing is I don't want to short into the daily EQ. I don't want that distance too close once again, okay? So what that means now is I'm literally waiting for Asia. And I shared some posts in the Gen chat. I always try to, reach out to people in there and share some levels, share some ideas. If people are still learning, I know it might help them. But I was literally saying, like, I'm waiting for Asia. And I'm going to wait and see what happens. So I'm waiting for Asia. And we get something like this that forms. So I can already see the potential is there. And that's a good sign. It's a really good sign. So in this situation, you'll notice now that the indicator is not actually going to share this setup. And you're probably wondering, well, why is the indicator not showing this setup? Why is it showing this? Because this Asia high is actually not an hourly swing point. Okay, and this is a very good lesson to learn, because even though it's not this level here, which is a very clear, valid H1 buy-side liquidity level, if you know me by now, you know I'm trading off of Asia high, Asia low, London high, London low. These overnight session highs and lows are very, very important and can be traded off of. So I waited for this FEG to form. The indicator's not going to show up because it's looking mechanically for hourly levels. So that means I got to do this manual. And this is why it's important to understand the concepts of the IFEG model, using the manual approach. You got to know the foundation of this thing. So for me, I wanted to see how big this thing was. Number one, it was about 7.5 points. So 7.5 points is perfect because I'm looking for at least a minimum of around 5. But, obviously I don't want to just have it at 5. I will if I have to, but anything higher than that is way better. So as price has, once again, that we're looking for instant reaction. You see the V shape? That's an instant sweep, right? That's that instant reaction. Strong momentum. How many candlesticks does it take to close through this IFVG, right? Is it consolidating? Is it a strong V? Like, what I don't want to see is price do this and then start doing this, right? Now, this can happen, and that's fine. And if this keeps happening, what I will then do is I'll move to a higher time frame, like the 2-minute or 3-minute, to try to clean this up. That way I know that if the IFVG confirms on a higher time frame, it still will look more like that V shape that I'm looking for, and less on like how the lower time frame would show like the consolidation. Okay, so in this situation, we have a very strong momentum move through the IFVG. Now, there's 2 ways to do this IFVG stuff, and I always talk about how I trade with a market order. I don't like to wait for limit order entries. If there's a situation where I take a short or a long, and let's say like I get in like significantly further away from the IFVG than I would like, then what I'll do is I'll start dollar cost averaging in, and I'll show you what I did and how I did that on the second setup. On this first setup though, we know Asia high is tagged. We got the V shape. We have the strong momentum. Now, I'm going to show you something about front-running entries. I only do this on the 1 minute. I don't like to like chase on the 2-minute or 3-minute. With the 2-minute, 3-minute setups, I like to wait for that candle to close just to make sure, because I've been burnt one too many times. But on the 1 minute, I feel like if the momentum is super clear, if the reaction is super clear, it's just giving me more confidence that I can take that additional risk of front-running my entry. Now, what does that mean? Well, we know if we're on the 1 minute time frame, I'm looking on the right for the countdown. So on the right, when I'm looking at that countdown, I'm waiting to see where price sits from about 10 to 20 seconds remaining in that candlestick. So anything below 30 is now I'm going to have my finger, on the sell button. I have my contracts already set. I would have already had my position tool set, so it would be something like this. Let me just show you what I'm talking about. So while all this is happening in the IFVGs here, I already know, like, okay, well, my stop loss is probably going to be about here or here. I think I had it about 24.5 points. I already know I'm targeting, the lows, right? So I can already say that if I'm getting an entry somewhere around here, then if I'm looking at my point cheat sheet, like the contract size to risk size, I can then start to determine how many contracts I want to open for this trade. Okay, so I already have this set, and I'm now waiting to see what happens here. So as price is starting to close through here, we're talking about 10 to 20 seconds, and I saw this thing push lower, but this pushed lower around the 40-second mark, so I got to wait. And by the time price got to, about, I would say, 10 to 20 seconds, price was actually around here. And that's when I just decided to market order in. So it was somewhere around here. And then the reason I do this is because look at how much lower the candlestick closed. I'm already in profit just because I entered up here and I took that risk. So that's what front running an entry looks like for me. And the thing to note, though, is you see how it's added 4.5 more points or 4 points more to my stop loss. So you got to be mindful when you're taking these positions that you don't actually know where your entry is going to be. So it will impact your total risk value, right? So if like I'm trying to risk, let's say $400 on this trade, and I have my contracts lined up, but I have them lined up for a trade that's 24.5 points, there could be some slight slippage, right? I have to be mindful of that. So you might want to take that into consideration when you're positioning, right? Maybe if you're trying to position for $400 here, maybe position it for a little less. That way it gives you a little bit more wiggle room if you get like a bad entry or a little, an entry a little lower than the IFEG itself, which is typically going to happen anyways. Or you can already account for it because you're already watching what price is doing. And you can say to yourself, okay, well, this is already, pushed around 39 points and now it's come back around here and now it's around here. So maybe instead of me thinking that this was going to be, a 24.5 point risk, maybe I'll just work toward it being like around more of like a 28 point just in case. So now you have your position size more accurately defined. Okay. I think this is a really important thing to talk about because a lot of people stress out over the risk size and then they get too much in their head about it and then they miss the trade because it's happening so fast. So explain it, hopefully not, with too much confusion. So my entry ends up on this candlestick. The second this 1 minute candle closes, now I have the confirmation. Okay. So now what's the next thing to happen? Well, you got to know where your TPs are going to be, right? Bobby says, so if you front run the entry by a few seconds and then price goes back and closes back inside, what happens, right? What do you do? I'm not sure if you guys recall. I'm not sure which live stream it was. It just happened recently. That happened to me. It was a bad trade. And I front run, I think, a 3 minute candlestick. And that's why I'm saying I don't do this with 3 minutes because I get burned all the time. I find with 1 minute candlesticks, because they move so fast, they don't typically close back inside. At least from my experience. And I've taken 51 trades this month. And I started tightening it up specifically with NQ. So if I was just calculating the numbers of NQ trades, I think I took 40 trades. Okay. And that's why I'm saying to you, no stress, Bobby. Take your time, go through it, man. It's all there. But the thing is, like, I find price will typically close back inside the IFEG on a 2 minute and 3 minute versus a 1 minute. And this is why I don't chase on the 2 or 3 minute anymore. I just chase on the 1 minute. Sorry, I'm not sure if I said that probably. I don't chase on the 2 or 3 minute. I only chase on the 1 minute. Now, let's just answer your question though, okay? If for whatever reason this closes back inside, so you have two decisions to make. The first decision, or I should say you have two choices to make. The first choice is you just immediately close the position and wait for that confirmation, right? That's the most risk-averse thing you could do because the way you want to trade, it's going against that. It's invalidating the setup. That's number one. Number two, or choice two, is you just stay in the position and observe what happens in the next candlestick. Now that can go either way on you. And then you would be back to that same choice again with choice one or two. Do you close at a loss now, minimal, and wait to see if you can, if it confirms and then you would re-enter? Or do you wait again for the next candlestick to see what happens? So this is all based off personal risk. If it was me, okay, I would just wait for the next candlestick. And then if that next candlestick puts me at an L, like it closes even further away from my entry, I'm going to close the trade. And I'll just wait because I know if the trade does confirm, I can re-enter. And if it's a winner, I'm already recouping my loss. And I'm being mechanical with my approach. So that's the way I would do it. And it sounds like much more easy and simple the way I'm saying it right now. But when you're in real time and you know, your emotions are flying, it's not easy to make that decision. So this is why it's so important to already know what your game plan is before the session even starts. You should already know what you're going to do in any of these types of situations, because the last thing you want to do is have your decision making run by your emotions and not by the logic. Right? This is why you got to be more mechanical with your process. You got to have the process like written down, have your game plan on lock. Okay, so I enter here, and my stop loss is like, just a little bit above. I don't have to have it at the swing point, otherwise it's going to ruin my TP in terms of like how much I can risk per the dollar value of what I will get on the flip side. So ideally what I'm doing when it comes to TPing is I'm looking for about 20 points for TP1. Sometimes I'll get a little bit greedy, and sometimes that bites me in the ass, and sometimes it doesn't bite me in the ass. So today what I did was I marked off, obviously a very clear level here. And if you go back to my chart that I shared in the Gen chat, you'll see my actual TPs and how I marked it off. But this is how I had it marked off originally. It was this level I had marked off. I think I had actually marked off this level too, just kind of as an identifier, because I didn't know what was going to happen. So I thought, I have a pretty decent entry. This is close to 20, but if I see anything go over this, then I know I'm already closer to 20. And if it hits the middle here, then I know I'm around that 20 point mark. So the second price moved on that second candlestick a little lower. That's my first TP right there. And then what happens is my stop loss immediately comes to break even. Okay, immediately comes to break even. So depending on where the entry was, I'll just move it to break even. Okay, I'm trying to look at my chart to see where I actually entered. I think it was like 892, believe it or not. Is it 892? I think it was 892. So TP1 gets hit, stop loss gets moved to break even. Now I have TP2 right here, right? TP2 is right here, and then I also have this level down here to work with. And the whole concept of this is like, you don't want to get greedy, right? So even though a level might not get tagged, it doesn't mean I won't take profit. How do you do this? Well, that means you can't use limit orders. You got to have your hand or your finger right on the button here. You got to have your contracts determined. So like, let's say I opened 8 contracts here, okay? 8 contracts on the mini. Okay? I'm just going to throw that number out. So when price starts to get to TP1, I'm immediately going to shave off probably one sec. Where'd it go? Okay, so I'll immediately shave off probably about 3 contracts. Okay, so now I'm going to be left with 5. The reason I'm taking 3 off the table is I'm just making sure I get paid. So I'll usually look to, skim about, I'll say 30 to 50% roughly. It just depends on how things look and how risky things look. So TP1's there. TP2 is down here, somewhere in this area down here. And let's just hit next. Okay, boom. So I just want to show you. So this was around 20 points. This is now around like 35 points. Now I usually would try to wait for like, say, 40 or something. And then this is a major TP down here, right? So on that second TP, right, because I'm down to 5, I actually shaved off two more contracts. So now I'm left with 3 contracts. And when price gets down here, this is where you can get to that final TP. But this is where you got to be quick. You got to know, like, to not be greedy. You have to really have this ingrained inside of you to not just wait for that level to get tagged. Because right here, any sort of TP here, you're at 50-something points, right? So in that situation, I have a TP here. I would actually just take off another 2, and then I'd be left with 1. That 1 is your runner. Now, why would you keep that runner? Because the data low had been untagged. And we saw what happened yesterday, right, with price. It really goes to show us that anything is possible. And if we just had this thing actually decide that it wanted to dump and tag out that data low, which I know is a high draw on liquidity level, well, that single contract is worth a lot, right? And it really will then amplify what I get here. Of course, what ends up happening, because we know what happened yesterday, it's probably not going to happen again, is I end up getting stopped out, right? right there. Boom. So now I'm stopped out, break even. And that's my trade. So base hit, managed well, read properly, executed exactly like how I execute all my trades, right? If you look back and look at them, they're all pretty much, they all look the same. But now you can see how I would address that risk management, right? This number here can also be like, if I had, let's say, I'm just showing you another idea. So like, let's say that first TP I took 2 contracts off, right? That means I now have 6 left. And then when TP2 hits, I would then probably take off 3. Right? So that's 5 contracts taken off, and I still end up with 3 now for TP3. And then I would take 2 and then 1. So however you want to do it, it's up to you. It just depends. I personally, if it's my first trade, I'll just take off a little more because you just never know what's going to happen. And that's how I played that setup. Okay? Anyone have any questions about that? If not, that's cool. If you do, that's also cool. Just going to clean this up. Okay, so let's hit play. We know where our other levels are located, right? We have the data low down here. Let me see where the hourly levels are now too. Yeah, it looks like that data low is a very key level anyways. It's an hourly level. It's also, like I said, the data low. And then we have London low here, which is our next key level in terms of the sell side. So if I'm going long anymore, it's got to come from down here, right? Or there's a second play here. And that play is off the daily EQ. Okay? And that's the second setup, which I talked about that I wanted to share with everybody. So lots of consolidation, lots of chop, not much happening. And then we start getting this. So that short idea I had here, you'll notice it got wicked out, and then it actually went even lower, tagging what would have been TP3, right? But I'm already out of trade. I'm just looking to hit a daily financial goal, like a dollar goal. If I can get it, perfect, right? Sorry, give me one sec. Okay, so as price starts to now dip at the daily EQ, I talked about how earlier that if price, if I wanted to short, I would want price to start from around, like from like, let's say the data low, right? So like, let's say we get that move off the data low and it comes here, right? What I want to see then is a rejection here and a move down, and then that's when I would have wanted to go short, right? So what's happening now is the opposite. Okay, we're getting a move off of Asia low, and price is working its way towards the daily EQ. So if I see a V shape happen here, well, I'm going to take that setup and aggressively take profit on the way up here. And I know that there was also an H4 level right here, right where this 4-hour bearish FEG is also located. I'll just mark this off as buy side. I'll go back to the 1 minute. So now I know that there is an actual higher time frame target here too, in the event a setup does work out. Now this put me back out here. Let's just go back. Let's go back here. Sorry, every time I go to the H4, it shows me all the other candles, and then when I go back, it resets everything. So, okay, so we're looking for that sweep. And that's right here. Oh, I went back too far. Or not far enough. Excuse me. Okay, here we go. That's better. Okay, so as price starts to dip now here, I can start to identify where the IFEG is located next. So I can already see I'm using this indicator. It's free, fair value gap by Ansh. I think this is very valuable to have because it just makes your life easier. I talk about this all the time. You want to have indicators on your chart to make your life more efficient, not to make your life more confusing. So having this indicator here it's already lighting up FEGs for me, even before they confirm. That's partially what it's supposed to do. So price now has something to reach for. We're getting a V shape off of the daily EQ. Now, if I look to the left, and you're looking at what's happening here, price has really respected this level for the whole day. So if I have price, and now we're not at open, so we don't have that crazy, opening manipulation happening. We're going to start getting hopefully cleaner and smoother price action. That's hopefully, that's what you would wish for or hope for, or typically what you end up getting, right? So if price is coming back to this level now, I've seen the past 2 times it's swept, instantly got bought up. This one even before it tagged it. If I start seeing candles close through it, and now we get an aggressive turn the other way, that's giving me more confidence that I could use this as a data EQ play, simply as support and resistance. Okay, so it's a completely different type of setup than I normally do with buy side liquidity, sell side liquidity, being on the right side of premium and discount. This is a completely different setup, still part of my plan, still part of my game plan, still part of my execution. So we're going to wait and see what happens here. So here's the FEG. And this is another example where the indicator is not going to show me the setup because mechanically it hasn't closed or swept an hourly level. So let's put that in there. This is how I had it marked. I then have my position tool ready to go because I'm waiting. When the candlestick was doing this, okay, given the nature of the price action, I didn't chase this. And I think this is a good explanation to what Bobby was asking earlier, right? Because if I had chased this, price would have literally hit me into stop loss territory, right? And that's no good. Probably about here. So given the way the price is trading and seeing how close it was to where the FEG is located and where it would then confirm an IFEG, I decided to just wait for the confirmation. And it's a good thing I did because, like I said, it would have hit stop loss. So just waited. And this is part of that intuition you got to have as a trader, right? You got to be able to study the price action every single day so that when things like this happen, you don't get faked out. You're not rushing things. You're not having FOMO. So I'm waiting to see what's happening. And we're getting a lot of this. This is not really showing us V-shape, right? I moved to the 2 minute. 2 minute doesn't really give me much to work with either. What am I talking about? Well, if you look at this FEG size, it's about 5 1/4. If I go back to the 1 minute, it's much larger in size, right? So given that it's much larger in size, this one's running almost, 26 points, right? I preferably want to wait for something like this to happen, right? Like I want to use this. I just need to see some more momentum kick through. So watch what happens here. Okay, so on this candlestick, we get a massive push, and this is where we get back to that concept of front running the entry. So as price is like ripping through here, I'm keeping a very close eye on this level because what I don't want to see is price sweep this level because that's liquidity, right? And if you think about it, price is already running 28, 30 points. Now I know it's very volatile, so it's okay. So as price is ripping through here, I'm waiting for 10 to 20 seconds. When I get to about 10 to 20 seconds, my first entry comes in. Now here's the thing: I dollar cost averaged into this entry, into the position itself, because if you look at where this candlestick is, it's pretty aggressive, and it's a little bit, too far away from, being around here, like closing just above, say, the IFEG. Okay, so I took a half size position around here. I managed to get in, and then price ended up closing a little higher. Then we start getting this. So obviously my stop loss and my RR, it's not looking good, right? Like from that perspective. But from the perspective of points, I literally was about to take profit here, and I didn't do it. And it's actually a good thing I didn't do it. Because what we get next is then price do this. So when price dips lower, this is where I then dollar cost averaged into position, somewhere around here on this candlestick, somewhere in this wick area here. So my dollar cost average entry put me around, it was about there's a discrepancy in price. So let me just double check where it is. I think it would have been somewhere around here. So my stop loss is still positioned here. It's pretty high, right? It's totally cool. Remember, I'm just looking for TP1 here. If price can just get here, I'm going to take profit right away and move my stop loss to break even and be done with this trade. So, nope. Boom. The second this hit here, my finger was here. I took off like 50% of the position. Okay? I took off 50% of the position because of what I was seeing to the left of me and because of the risk that I had taken. It was less favorable for me, right? Versus if I was on that first trade right here, which was way more favorable for me. So I took 50% off here and I let the rest ride. So if we get a little bit higher up here, I'll take my second TP, right? So my stop loss is now at break even. And we get one of these. I thought it was so close. I thought to myself, should I have taken more profit at that point or not? Actually, I'm looking at my chart where my entries actually are. And, oh, wow. Okay, I'm mistaken. So it looks like I actually did not take TP on this candlestick that I thought I did. I think it looks like I had my TP set here. So it looked more like this. So if you go back to that chart that I had, you'll see what I'm talking about. Let me see if I can. No, won't let me paste this. Too big. So I'm mistaken. It wasn't this. I had this marked off, but I didn't take TP here. I actually ended up taking TP when price hit this level. So that was my first TP because it was about 32 points. Now I remember the entry that I put in the chat and the way I marked it down. So that was the first TP. 50% still taken off. Stop loss goes to break even. And the reason I do this is because I don't know what price is going to do. And I want to always maintain the profit that I have, right? Okay, so what we end up getting is price taking me out at break even, the remaining contracts. But because I took two base hits, those two base hits accumulated for me to get to the daily goal that I wanted to get, or that I keep for myself. Okay, so it's little base hits like this that work in our favor. The aggressive risk management, the aggressive TP stop loss placement. It's there to protect me because some days are going to be like yesterday where, and I'll show you what I'm talking about, given even how nutty of a day yesterday was because of the 660 point dump at the top. Let me see here. Where are we? 12. So in the morning, you know how we had that dump? This is from yesterday, by the way. I just want to show you. So we had that massive dump, right? As all this is happening, all I can do is look for longs. Okay? I'm just going to shift gears 2 seconds just to show you what I'm talking about with the TP management thing. So as price is ripping lower and lower and lower, all I can do is wait for hourly levels to get tagged and then make a decision on how to execute that thing accordingly. Okay? I'm not sure if this pops up. Yeah, okay, so there we go. So as price is ripping lower, here's our hourly sell side liquidity level. We can see that we got the IFVG starting to form, which is good. And I'm just going to hit next. And what ends up happening is we get this. Okay, so when this is all happening, I'm not sure I want to take this off the 1 minute time frame, so I start moving up time frames. I believe I ended up taking this on the 3 minute time frame. Okay, right there. So you see how this candle closed? So like this is, first off, optimal. Why is it optimal? Because it closes very, very close to the lip of the IFVG. So this is a very like textbook perfect type of entry. And once again, because it's on the 3 minute time frame, I'm going to wait for that candle to close. And given the nature of the size of these candlesticks, right? This was a huge drop, 666 points. It doesn't look like it, but it was. My stop loss is at the low because it's so volatile, almost 80 points. Okay, TPs are, wherever you want them to be, 20 points, 30 points. But here's the thing about the stop loss management and the TPing. Okay, so as price does this, I'm already in position, right? This is already 100 points. That's already 100 points. 1, 2, 3, 4 candlesticks, 100 points. Stop loss goes to break even, right? Because in this example, it's no different than the previous example I just showed you that happened today, right? The only difference is how am I mentally going to trade this setup? Am I going to have FOMO? Am I going to panic? Am I going to have a weak hands? There's a lot of things that come into my mind. Now, I'll admit there was a trade here that also swept liquidity, and I got greedy and I didn't take my TP. And this missed, but then I ended up closing the trade break even because I knew I had fucked up. So when this happened, I had this trade in my mind. This is why I'm saying it's like you have a battle with yourself pretty much every single time. And so I did score my TPs here. All was well. I hit my daily goal. I was happy. Like, given that price dumped 660 points at open to even catch a long trade, I was grateful. And I don't know what's going to happen next. But sure enough, we get something like this. So perfectly timed and picked off where the reversal was going to be. But instead of holding this position at least up to even the daily EQ, I closed it early because of this trade here. And look at how high this thing went. Now stop it right here because this is like 6 p.m., right? Right about here. Right here. That's 6. Okay? But I want to just show you something. So this trade setup, put the stop in. Oops. 25550. Okay. So in this setup, hit my dollar value. I'm good. This trade here is what caused me to exit early. And when I saw this happening, I thought to myself, okay, I have to journal about this because I had even though I hit my daily goal, which is great, I missed out on trading the way I know I should be trading, which is like skimming profit at specific levels and letting my runners run. And why do you let your runners run? Because you never know if a monster of a trade is going to happen. Okay? If I had let this run, even if I said to myself, like my major target is the daily EQ, 300 points. Think about that. Right? So I could have taken a couple TP here, another one here, and I would have had one runner left for something up here. Otherwise, it's at break even, or maybe I'm trailing the stop loss, right? Something like that. But that's a 300-point move. Crazy. This thing actually ended up going even higher. 426 points from the bottom. Now, I talked about IFEGs versus unicorns and why I like trading IFEGs like over a unicorn. And the reason is simply this. Okay. Now you can look at this setup and we're on the 3 minute. Let's just go to the 1 minute for a sec. And let me just get rid of this. Okay. So this is yesterday's price action. Okay. So if I'm looking for like a unicorn in this situation, what I would have wanted to see is, whoops, we have, you know what, I'll draw this out. So we have price come down, come up. There's our breaker block now, right? Then there's a sweep. Now, ideally, when the price goes back up here, I would have wanted to see one more sweep, and then you get one of these, and it looks like that, right? But so this area is right here. This area is this. This is what I would have wanted to see, but instead we get a swing failure pattern, which then means your breaker block is right here, right? So the thing with a position like this using the IFEG concept is, and this is my own personal opinion, okay? It's not knocking anybody. I still think the unicorn's a great model, and if it works for you, then it works for you. I think that's the whole thing with this is you have to figure out what works and what doesn't work. So if I'm treating this as a unicorn, it's a pretty ugly unicorn, number one. And you get that swing failure pattern. So there's your close above that breaker block. And you get one tag to potentially enter that position. The other concept is maybe you're entering off of the swing failure pattern itself, right? So that would mean then you're using like this, more of like the order block idea, and then you would be entering here. So instead of entering up here, you'd enter down here. Another concept. But for me, my preference once again is the IFEG, and I prefer the IFEG because it gives me a cleaner entry with less need to analyze. Like I showed you right there, you saw how much analysis I had to do just to figure out like what I'm dealing with, right? With the setup. With this, and this is why I like it in terms of preference, is I'm literally just looking for the IFEG. And I'm waiting for two things to happen. I'm waiting for an instant reaction off of a key level, and I'm looking for strong momentum through the IFEG. And that's it. And in most cases, it's going to actually give me a more optimal entry. Okay, in most cases. In this case, if you did think that was a valid unicorn, then you would have entered, and it would have been around the same entry nonetheless. Okay. Sorry, 1 second. Just get my notes back up here. Okay, so this is a great explanation, or I shouldn't say explanation, I should just say it's a great example of that risk management piece of skimming profit at your TPs and then moving your stop loss to break even and then catching runners for higher prices, in this case because it was a long position. Now if I go back to today, let's go to the 1 minute. So on that first trade setup that I showed you, this is going to speak now more to the concept of unicorn versus IFEG. Yes, sir, it's recorded. It's recorded. I'll share the link after. We're going to be done soon, so no stress. Here's the IFEG. Right here, right? We know the IFEG is right here. And the only reason I'm recapping this, because like I said, I just want to show you the difference between the IFEG versus the unicorn. Asia high gets swept. If we're trading using like 4 hour, 50 minute, 1 minute alignments, let's go to the 15 minute for a sec. Right? We can already see we're sweeping highs, lots of liquidity, and obviously Asia high gets swept, so that's pretty key. If we're looking at the 4 hour, maybe you're trying to determine your daily bias. Here's the 6 to 10 candlestick. If we're looking for bias, we could say that we are moving from internal range liquidity to external, which then means that we have a bearish bias, right? If we're using those types of concepts. So let's just go back to the lower time frame now. So now that we know what the 50-minute looks like, we know what the 4-hour looks like, we go to the 1 hour or the 1 minute. And now you're just looking for a unicorn. So we know where my entry was. My entry was around here, and I already secured my TP right here. If I'm looking for that unicorn, though, that unicorn, it has to start around here. Here is the breaker block. Here is the liquidity sweep. And here's the daily EQ. Now I just want to show you something. Okay, so I hit pause right there. Now, when we're looking for unicorns, typically what we're looking for, once again, is, in this case, we want to see price go up, create a higher high. We want it to come down, create a higher low, and then we want it to sweep a key level of liquidity with the higher high. And then we're looking for that clean displacement, retag of the breaker block, and then another move lower, right? That's the most A+ way things can go. What we end up getting is consolidation inside of the breaker block, okay? And then the actual entry is here. So the problem with this is, as a unicorn trader, is this A+ or is this not A+? I would probably say it's not A+, because it doesn't have strong displacement through the breaker. We've got consolidation happening through the breaker, okay? But let's just say, for whatever reason, you do decide to enter, and it's not A+, it's like a B+ setup or whatever. So you enter right here, and maybe your stop loss is about, I don't know, let's just say you place your stop loss here at this swing point. You're not using the overall high. And then you're looking for lower prices, right? We talked about how the data low was down there. We talked about how London low is down there. So we have a clear draw on liquidity. But here's the thing I'm trying to tell you. I'm already done the trade. This trade's already done. No matter what's going to happen here, like for me, this trade's already done. Remember this setup here off the daily EQ? This was setup number 2. Stop loss. But guess what? In this setup, I've caught a long off the daily EQ, and I've already caught my second bid. So this is a big reason and example of why I moved off the unicorn and why I moved to the IFEG, and I adjusted and relearned. Oh, not say relearn, but I studied and learned a new way of doing things that complements my own trading personality. And I talked about this yesterday in the live stream with 2 Degrees, that the thing with trading is, like, you keep trying things until something finally really resonates with you and makes sense. Okay, like unicorns felt great to me. It taught me a lot of things. It gave me foundation into understanding ICT concepts that I previously did not have. But as I started going through the trials and tribulations of what it takes to trade a 5-minute unicorn, or what it takes to trade a C2 5-minute unicorn, or what it takes to trade a 1-minute unicorn, I started noticing that it's not aligning with the trader that I was becoming, right? Because I have all that IQ that's been developed. So then you start exploring other things. And then you trade it for like a month, you journal, you review. And then when you start to review, that's when you can see, like, how did I feel? What were my mistakes? Were there repeatable mistakes? What's the, like, RR factor perhaps? Or overall P&L? How many times did the trade, go in my favor and then stop me out, right? Things like, what was my win rate percentage? So you start analyzing a lot of that information, and then that can help determine what direction to go, because that happened to me. I was trading a bunch of things, and every time I would review, I didn't feel good about things. I didn't like the numbers I had. I didn't like how I felt. So I had to go back to that drawing board to understand more of like who I was as a trader and who I want to become as a trader. And that led me more back to my old crypto kind of ways where I'm used to like high volatility. I'm used to fast-paced environments. I'm used to like getting in and out of trades quickly, right? Like I don't want to be stuck in a trade, especially when you're dealing with crypto. Like you don't want to be stuck in crypto trades for a long time because manipulation is always around the corner. And those exchanges are ready to take your money and they don't give a shit. So you got to take your profit when it's there. So drawing on a lot of that, but having now the skill set and the education that I've built a foundation with, I can then start to understand like, okay, I know for sure I'm a 1 minute time frame trader because that's where all the opportunity lies for me. I know I'm a reversal trader because when I was trading unicorns or any other sort of type of model, those models always felt the best because when I go back to my crypto days, when you're in crypto and you're trading like a retail trader, which most of us are and were, you're trying to buy Pico bottoms and, like snipe those entries, and you're trying to literally hold that position right until the end. And it's like you're trying to be perfect. And we know that that's impossible in trading. There's no such thing. But drawing from some of the positives behind that, I already know I'm 100% a reversal trader. I want to trade those reversals. I showed you yesterday's long just a second ago, and I showed you how that's the exact point where the reversal happened. And it's nothing that I'm doing different than anyone else. Do you know what I mean? It's nothing like that. So anyone can pick that out. It's just you have to understand who you are and if you feel comfortable doing that. Because I stood in front of a freight train, and that freight train was NQ running 666 points against me, while I'm just like looking to catch a long, right? It's like you're trying to catch a knife, a falling knife. But I've stuck to my guns. I stuck to my those concepts of the H1 or H4 higher time frame buy side liquidity levels because I'm going long, or sorry, sell side liquidity levels because I'm going long. And I just play what it gives me. And it's risky as hell, of course. But the thing with trading is like you can't have fear. You can't have fear. You have to have no fear. Because the second you start having fear, you're going to doubt yourself. And then when you start doubting yourself, you're now trading off the emotional side of things and you're not trading on the logical side of things. So just putting that out there and just showing you why I moved off the unicorn and why I moved into the IFEG. And, I've had lots of conversations with Matt and Nate about, I'm not trading a unicorn, but I'm in Unicorn University. And the thing is, like, these guys are great guys, and they're building a community for like-minded professionals. It's not about what model you trade. It's more about like the type of person you are. So if you think of the type of, if you consider the type of people and the quality of the trader that is coming into this community, that's what it's about. Hardbuller, the video links, you can't find them, and there's a reason for this. All of these live streams are unlisted, which means if you have the link, you have access to it. Because everybody in this community, is part of this live stream, of course, 'cause I'm doing it here. These live streams are actually only available for you guys. And it's because I don't really care for like views and ad money. Like I'm not in this for that. I have other purposes and reasons for doing things. And those unlisted videos are available for anyone inside of our community. If you go to my channel and you go to the live stream thread. Now, if you can't find my channel, if you can't find the live stream thread, go to the very top of the browser inside Discord, like for the channel, and make sure you have all the channels unlocked, because my channel was created later and it might not be visible for you. Okay? If you have problems, just hit me up and I'll help you out, okay? TBD, Or TB Drifting, this is crazy you're talking about this right now. I just started asking myself if unicorns aren't for me because I just don't understand them. I have got many wins with them, but many more losses. I'm ready to try something that absolutely clicks. Yeah, and you know what? This is part of that journey, man. Like, I can't tell you, like, I have actually gone through this. No problem, brother. I've gone through this 6-7 times, man. And it's like, it's stressful. It's super stressful because, like, you have the skill, you have the foundation. It's just like nothing works. And then I start learning and realizing that some models are only 40 to 50% win rate. And I think that unicorn model is like a 40 to 50% win rate. Now, when you hear that, there's two parts to this equation. The first part is, well, if you're trading a 40 to 50% win rate model, but you're aiming for 2R, then you're profitable because all you need is a 33% win rate to be break even, right? So you're profitable. But the second part of this equation, though, is the trader's mindset and the psyche. Are you okay with losing 60 or 50 to 60% of the time? And I know I've talked about this in other live streams. For me, I am not okay with losing 60% of the time or even 50% of the time. I look back at my stats for this month. I told you I had taken 51 trades, but and those are because I started the month off trading GC, E, S, N, and Q. And then I started having more personal realizations that less is more. I cut off ES, I cut off GC. I was only trading NQ. Okay. So when I looked at my stats, the interesting thing was, and I'm just going to pull out a calculator just so I can get this accurate. So I had taken 51 trades, 2 were break even, and I think it was how many was that? 50, 51 minus 2 minus 10. Minus 11, excuse me. Okay, yeah, 38, there it is. So I had 2 break-evens, 11 losses, and then 38 wins. Now, when you think of wins, your mind might start thinking like, holy shit, 38 wins, 2R. No. Remember, that's not what I'm doing. What I'm doing is looking for daily monetary goals, right? So just throwing out a random example, let's just say my daily goal is to have a range between $100 and $200. Let's just say it's something like that, right? So when I say I have 38 wins, it just means that I was green on the day 38 times out of 51. That's what it means. But if I look at the winning percentage, 38 by 51 gives me 74.5% win rate. So when I look at that, that's way more aligned with like my own personality than if I was trading something else that was giving me a 40 to 50% win rate, right? Because now I'm losing only 25% of the time, roughly. Now, if I took away all those trades I took with GC and ES, that led me to 40 trades. And I had 2 break even and 9 losses, I believe. Was it 9 losses? Yeah, and 9 losses. And so that means 29 W's. 29 with 40 gives us 72.5% win rate. So you see I'm still in that 70% win rate range. That feels good to me. But it's taken me a lot of time to put this together. And I'm trying to share this with everybody so that it can hopefully like expedite your own process of thinking about things. So TB Drifting, when you're talking about like you're ready to, try something else, I would just ask you to look inside and try to figure out the answers to some of those questions that I've been kind of posing more generally, right? Like, what type of trader are you? Reversal, continuation? What time frame do you like to trade? Like, what feels good? For me, it was the 1 to 3 minute. I tried experimenting with 5 minute again with this model, and no, not good for me. 1 to 3 minute max. My ideal setup is on the 1 minute. Okay. And then in terms of the actual trading model, truth be told, like the trading model, like you could trade any model you want, and it'll most, like a lot of these good models that we see, Forever model, Trinity model, IFEG model, Unicorn model, OTE model, 2022 mentorship model, like all these models can be successful, but you have to have filters in place to keep you safe. That's like, those are like the tools that don't come with the toy, right? Or don't come with, something you buy that needs to be built, right? Nowadays, I know with IKEA, they give you all the tools. But imagine back in the day, you're buying things like chairs and sofas and desks and bookshelves, and there's no tools. They just give you the screws, they give you the wood, and then they give you the instructions, but there's no tools. And that's kind of what I'm talking about, like with trading, like the bookshelf, the the table, the dressing table, whatever, like that's the model if you think about it, right? But the tools are the filters. The tools are like things like, I'm not going to trade outside of 9:30 to 11:30. The tools are, I'm only going to trade ERLs. I will not trade off of IRLs on the higher time frame. Filters could be like this. If you're trading a unicorn, like I'm not going to trade a unicorn that consolidates inside of the breaker block. I will only trade a unicorn that has a very clean, swift move through the breaker block immediately. It's things like that. You have to figure out what those filters are. You know what I'm saying? He says, I like the 1 minute, and like you, losses do not feel good to me. I know we're supposed to be unemotional about it, but losing sucks. There's just no way around that. Yeah, of course losing sucks. It reminds me of the book Best Loser Wins, though, right? We have to be okay with losing. The thing you don't have to be okay with is how much you lose, right? No one talks about that part. That's why I'm trying to talk about that part. So once again, if you can lose 50% of the time and have a 2-hour trade setup that works, you're going to be profitable by the end of the month if you follow your own risk management, right? But if you don't like losing 50% of the time, guess what? You're going to do things like what I did. Losing that much is going to make you go on tilt. It's going to make you revenge trade. It's going to make you panic, because when you're in a good trade, you're going to be fearful that, oh man, I don't want to take another loss. Okay, I'm just going to exit the position and take my money while I have it. And then guess what happens? Price goes 2R the second you take your profit. You know how many times that's happened to me? One too many times. I was talking to someone today who needed some help. I won't say who they are, but there's someone in our community, and they were explaining how 5-minute unicorns, obviously they don't appear all the time. So you go through a stretch of, let's say, almost, a week and a half, no trades. And then you get a trade that sets up that you believe is A+, and then it loses. This is another thing nobody talks about. Can you go a week and a half with no trades, but you show up every single day ready to go, and nothing happens? And then on that, let's say it's the 9th day, you get a trade and it's a loser. And let's say it's on a Friday, just to make it a little bit more gut-wrenching. Now you have that whole weekend to think about that loss and the previous 2 weeks that you had nothing. Can you actually survive that? Because that's what's going to happen if you trade 5-minute unicorns, because I'm not the only one that's experienced that. I'm now seeing a lot of other people experience that. So you have to figure that out for yourself. I can't tell you what's the right way or the wrong way, because there is no right or wrong way. You have to figure out for yourself, once again, can I lose 50% of the time and still be profitable? Can I not take a trade for 2 weeks and still be profitable? When I asked those questions to myself, the answer was no. And the thing was learning the model, learning the concepts. That was the main objective for me, because I didn't know anything about ICT concepts. I had no clue about liquidity back in 2023. It was only in 2024 when I started studying with Matt that he taught me all that stuff, right? Similar to like what he's still doing. It's the same message. He's teaching everyone else the same thing. He's just on bigger platforms now. But the messaging is still the same, right? The other key thing with Matt, which I love, is the mental stamina and endurance he has. He knows his own risk, and it's a good lesson to learn for the rest of us to look inside to figure out what is our own well-defined risk. And you're only going to understand that when you start to show up for live price action, unfortunately. And that's the thing. There's no shortcut to this thing. There's no get rich quick thing to this. Like I've passed like 6 to 10 funded accounts and then blew them all. And that doesn't feel good, but that's happened to me. And that happened to me while trading with unicorns. Honestly, that happened to me while trading unicorns. So it's one of these things where you have to really, really, really look inside yourself and ask those hard questions, and then have grace, have faith that you're going the right direction. And I think, honestly, if you're here right now and if you're listening to this with replays, if you're just a trader, like, it's special that you're trading. And I'll tell you why. This is one of the most well-kept, guarded secrets in making a lot of fucking money. We've seen this with the people who do flaunt how much they make. It's like a thing in our industry for some reason. People like to show, I got a $1 million payout. And then they show their face. No offense to these. Well, I shouldn't say no offense. No judgment to anybody. But that's dangerous to me. And I come from the crypto world where I see people who used to flaunt stuff like that and then they got robbed. People want to know where you live and things like that. So, like, I always have that in the back of my mind. But my point of what I'm trying to say is you see the potential that's out there. The percentage of people that can actually do that, of course, is very, very low. But once again, you don't need to make $1 million payout to live life, comfortably, make a living off this thing. Honest to God, if you can make $300 to $500 per day on a base hit trade, and you can start to just scale your funded accounts, right? You got Take Profit Trader, you got Lucid now, My Funded Futures, Apex. Like, max out these prop firms and try to adhere to their rules as best as you can, and then take those base hits. It's going to start slow, but the thing I promise you is once you start getting over buffers and you just keep taking base hits, those payouts are going to come fast and ferocious. And if you've scaled and copy traded those base hits, and I'll just do some math with you, just so you know what I'm talking about. But like, let's just say you made $400 today, but let's say you have 10 copy traded accounts. You didn't make $400 today. You made $4,000 today. And then when you go to get your payout, we're not talking like $20, $50, $100 payout. We're talking like thousands of dollars, right? Let's say you have 20 accounts. That's $8,000. And then obviously if you've been doing this for a long time, let's say you got 30 accounts. And a lot of people have 30 accounts. And they're happy to share that they have 30 accounts. And like, if you had a $400 day with 30 accounts, that's $12,000 you just made today across 30 accounts. Which means when you start getting eligible for payouts, you're going to be getting a payout of like 5 figures. Now, I'm not saying this to, dangle a carrot in front of you. I'm just sharing the perspective of the value of a base hit. And this is why when I started crunching numbers like this, I stopped caring about 2R, and I started caring more about, am I green today or am I red today? Did I have an opportunity to take profit today, or did I, miss out on taking that profit because I got greedy or something like that? Or did the trade just go to stop loss? Because that definitely can happen, right? Because losses are part of the game. So I think it's important that we try to just kind of like pivot some of the way we think about things in this industry. We can't compare ourselves to one another. That's just unhealthy. Like, stay in your lane. Work on building your own system, even if it's like borrowed system from someone else. It doesn't matter. Like, who cares who owns a system or the model? Like, it doesn't matter. Like, even the way systems are called specific names, like, it's just proprietorship, right? To sell something at the end of the day. But if you look at the concept itself, if you can get a base hit doing this, then I mean, you're winning. Log off for the day. You're done. And remember, it's going to start slow, but slow is fast, because it's gonna have like a snowball effect, and next thing you know, you have a full-blown avalanche happening. And when I say avalanche, I'm talking about like you're gonna have a massive payout waiting for you. And the thing too with trading is, when you're trading those evals, whether you use the OSOC method or some other method to just kind of expedite the pass on the eval, or maybe, like what I like to do is I just go all in on one trade. I just think of it like that, especially with IFEGs, like I've shown you. I mean, you can pass an Apex account with 30 points, and I've shown you multiple trades where it goes to 30 points and then goes and takes me out at break even, right? But if I'm thinking of like passing an eval, that's one trade, right? Or if I need to pass that eval, within, so like I like Take Profit Trader. Take Profit Trader, it's like 5 days to pass an eval. The reason I like Take Profit Trader is because it's same day payouts. I think that is highly undervalued. People don't look at that for some reason, but it's amazing. Especially when you get over the buffer and you have copy traded accounts. I think they allow up to 5. But still, I mean, like, you can get daily payouts. That's crazy. Off base hits. I just showed you the numbers. Like, if I have a $500 day, multiply that by 5, that's $2,500. I can cash that out right now. You know what I'm saying? Can you imagine every single day you just catch a base hit for 20, 30 points, and you make $300 to $500 across 5 accounts, and then you take out $2,500, put that in your bank account? Like, people make $25,000 to $5,000 in a month, and you're gonna make that potentially in 6 minutes if you know what you're doing. So when I start thinking of things like this changed my whole mindset, changed my whole everything about what I was doing. So like, I learned what I needed to learn. I figured things out. I figured out what works for me. I understand what the bottom line is, right? The goal is to get to payout. The goal is to pay yourself. And the only way you can pay yourself is if you can take profit off the table when you see it. Because anything that is unrealized is unrealized. And when I hear about people saying, and I used to say this myself, but like, oh, it was a bad loss. I mean, when I think back about bad losses that I had, and let's just pop open. I know I've been ranting a lot here, but I appreciate y'all listening to me. Let me just go to this ES trade for a second. Okay, so this is that ES setup today, right? So if we just backtrack for a sec, let's just go right about here. Yes, sir, Bobby. Compounding is key. Okay, so let's just go back to this for a second. I just want to show you something. So here we have the 15-minute FEG, right? sorry, the hourly FEG. My bad. So we have an hourly FEG, pre-market. We start getting that set up. We get the liquidity sweep, right? Like this. We get the breaker block. Highest up close candles before the leg that takes liquidity. Breaker block, here we go. And then let's do this. Okay. And I'm only showing this as an example. It's not judgment. It's not like I'm just speaking real here, okay? It's just real talk. That's all this is. Because these are the things I looked at and I started to question things about how I was trading. But the only way I can do that is by facing hard questions and facing hard truths. Okay? Now, I just want to show this to you. So, this entry starts right here at 9:45, right? Then you get some drawdown. Price goes up almost 20 points, right? We're at this goes 1.2 R, 1.23 R. And then it goes all the way down. And it goes all the way back up. And it goes all the way back down. And then after a while, stop loss. So when I used to analyze stuff like this and think about that was a bad loss or that was a roller coaster of a ride. Yes, trades can have roller coaster rides, 100%. But roller coaster rides usually happen on trades typically that are on higher time frames. Because you have targets that are further away and you have, price action that has more time to develop and do what it's going to do. But on a setup like this, okay, like I can't stomach this. Like I can't stomach this because when if I was looking at my P&L, if I was looking at like what I was looking at here, so like if I was risking $500 on this trade and then to look and see that my trade is now over $500 and to not take profit, that hurts. Remember, maybe I haven't taken a trade in 9 days. You know what I'm talking about? And my goal is a payout. I told you what happens if you can just get $500 in a day across 5 accounts, right? $2,500. To me, when I look at this, I look at $2,500 being lost. Like whatever, like I would look at that like $2,500 lost. You can look at that with any dollar number you want. But like, was getting 2R that important? Or was just getting that $2,500 more important? So for me, there's like that perspective with this that I had to start looking into and reworking things, because this to me in my lifestyle and who I am as a trader is no longer acceptable for me. So I hope that gets you thinking. I'm not trying to change minds. I'm not trying to tell you what to do. I think the only thing I'm trying to get you to do is to just think outside the box. There's a few of you here. I appreciate your time, honestly. Anyone who does listen to the replay on this, I appreciate your time as well. And there was a lot more talking today in terms of mindset and risk management versus like the chart itself. But I think it's an important topic of conversation to have. I think it's very real. And, once again, there's no negative judgment behind anything what I'm saying. There's nothing malicious here. My goal is to just help people get better, to think more about their own situations and just become profitable in a long-term perspective versus a short-term one, right? Because the faster we can get you figuring out things, the faster you're going to get to a payout. And you don't have to share that you got a payout either. I don't actually believe in all that stuff because, like, why would I show what I make to people online? Like, I can show you the trade setup. I can show you everything else that matters. Whether I make $100, whether I make $5,000, whether I make $30,000, the chart is still the chart. And I think that's what's more important. And I'm not trying to sell anybody anything. So I mean, people who are trying to sell things to people, I understand, you got to prove you're making money and stuff. I get that. I'm not selling anybody anything. So I don't have that pressure on me. And I don't want that pressure on me, to be honest with you. I love talking shop. I love doing stuff like this. I love helping people. It makes my day when I see people put things together. It makes my day when I see people, work on their craft and get to, those payouts, get to whatever the goal is. I love seeing that. And I can't tell you how many people I've seen get to that point. And it's not because of someone trading the way I trade. It's just because of having the conversation or conversations across a span of months shifted something inside them to, look at things differently, ask themselves the tough questions, and be real with themselves. And that's why I'm saying all these things to you guys. And I'm putting this on recording for the AshCap Discord community, so you can also do the same thing. Thanks, Bobby. I really appreciate your support, brother. You're such a good dude. Groovy Gene, appreciate you as well. How do you deal with information overload? Overload. Hark Bowler, I appreciate you as well, brother. I know we've been talking for a bit. So, how do I deal with information overload? Yeah, that's a real thing. So I'll put some perspective about that to you guys. So, when I first started learning about unicorns, sorry, this might sound really long-winded. I apologize, but I'll try to streamline this answer. So when I first started learning about unicorns, I then started learning about the C2 unicorn from Day Trading Realtor, and I started studying with him like every day. I was like a sponge, and I'm someone that likes to learn, right? When I want to learn something, I go like way down the rabbit hole. What ends up happening with analysis paralysis for me is when I start to get into situations where I learn so much and then all of the concepts contradict one another, or they just don't work together. And that's what started happening with me. Is I started learning about unicorns, and then I started learning about C2 concepts, right? The C1, C2, C3 accumulation, manipulation, distribution type candlesticks that T-Trades talks about. So I had learned a lot of the T-Trades concepts off of Day Trading Realtor, and then I actually joined T-Trades Discord for a month or two to really understand more about the fractal model, because the thing I wanted to learn about from him was, I'm a reversal trader and I'm in the trade, but what happens between when I get into the trade versus when I get to the TP? That's the continuation. I didn't understand how to read that type of price action. I learned that through T-Trades, right? So he was using like opposing candlesticks. We were talking about order blocks, all that kind of stuff, right? And then I started learning about other models, Forever model, which is like, okay, there's a SMT presence. So I'm like, hey, I don't know much about SMT. Let's learn about SMT. So I started learning about SMT. I know Matt talks about SMT, but it wasn't like sticking in my head, like how to use it properly. And it was just too much. So I was already starting to expand into situations where it's like I'm getting into the overload mode. So when that starts happening, you start making bad trading decisions and blah, 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 blah. Point of the story is, even with IFEGs, like I learned about IFEGs last summer, and I still wasn't able to put shit together. I only was able to put shit together with IFEGs after coming back to it at the end of last year and really focusing in on it, because I had asked myself the hard questions, I had faced the hard truths, and that's where I end up kind of now going in this direction. So the way you'll know you're tipped off with analysis paralysis is you're going to start noticing that your trading sessions get really stressful and highly emotional. You're going to start noticing you make mistakes, repeatable mistakes. You're going to notice that you forget things, When I say forget things, I mean, like, let's say I have a checklist and my checklist says I'm supposed to trade on the right side of premium and discount. But guess what? I'm taking the long way up here, but the daily EQ is right here. I should be shorting from up here, right? So it's I mean, it's a silly example, but it's an example nonetheless, right? When you start getting into that situation, and then the final thing that happened to me was I would shut trading down for the day, and guess what? I'm still stuck in that paralysis in real life. So if you're like me and you're a parent or you have a spouse, you have maybe a full-time job, like, and you're carrying all that baggage into into real life, that's another huge sign or a red flag. So I think the final piece of the pudding for me was someone was asking me about GXT. So I know GXT, from what I know, is a T-Trades guy. I actually remember him when I was in T-Trades' group, but he wasn't as, I don't think he had become public with his YouTube and his education. But I remember one weekend I was like, oh, GXT. So I was like, okay, let's see what he's all about, because he's a T-Trades guy and there's like a lot of people like this guy. And someone I know inside the community was like, hey, do you know anything about GXT? So I thought, okay, let's check it out. I tell you, I had this guy's video on my screen, and like I said, this is no judgment, nothing negative. This is just my own personal experience. But at that point, end of last year, because remember, we have Christmas and all that stuff, right? I have loads of time on my hands. I'm like, let's put on GXT's, training videos or whatever. Let's see what this guy's all about. And I started watching it, and everything he was saying sounded like a completely different language to me. And all he's doing is talking about ICT concepts and T-Trade stuff. But because it started to not make sense to me, it sounded like a different language. That was like a huge eye-opening moment to me in real time, that I am having system overload. I already learned everything I need to know. If I can't be profitable now, then I really have to figure out what's going wrong, because I know how to read liquidity. I know all these different entry models inside out. Obviously, in that situation, the problem isn't the model. It's not technical. The problem is me. So that's what I have to say about analysis paralysis. And once again, there's no knock to GXT, because I know there's people who are trading his model and crushing it. And like I said to you guys a few moments ago, my whole goal, my whole perspective of all this is I just want to see people better themselves, better their lives, take care of their families, right? That's what I care about. And I know it might sound cheesy or whatever, but I'm showing you by action that that's the reality of what my purpose is. Mr. Coco, what's up, brother? Hey, Kira, what are your thoughts on C2 from T-Trades? It's also reversal based, I believe. Yeah, 100%, man. It is. I spent almost 10 months trading C2 unicorns. Brilliant stuff. It's what I'll say about a C2 system and how it works with T-Trades from what I gather is T-Trades is looking to trade on the C3 expansion. What that means is he's not a continuation trader, or the model the model is a continuation model. It's not a reversal model. The C2 element is providing a higher time frame context, providing a higher probability of how the candlesticks are forming, right? Because we know sweeps like this, right, are good indications of, like a sweep like this is a good indication of a reversal, right? When we're talking C2, we're talking about, now this is a 5-minute time frame, but just like, imagine this was like the hourly, okay? But if let's just say this is the hourly, just for whatever. The concept with T-Trades is C1, C2 is the sweep of C1. Of course, C2 has to close below the high here, which it doesn't do, so it's not technically a C2. But if you study from other people, like there's a concept, basically the same thing. It's CRT, I think is what it's called. And then now I see other people stealing a lot of what T-Trade's kind of showcased in terms of the visual. But the idea is still the same, right? Accumulation, manipulation, and then he wants to trade C3 distribution or expansion. So the C2 idea is, for him, is waiting for the confirmation of a higher probability position of what a reversal could look like. Because reversals, I'm going to butcher what he says specifically, but he always says something like reversals always start off of a sweep of a swing point or something like that. So that's what this is. So then if you go to like a lower time frame now, off the hourly, if you're trading the 5-minute, you're then looking for that expansion. So what that means is, and this is, I would say to you, study the market maker model, because everything we're doing is the market maker model, right? Market maker model is waiting for that reversal to happen and then watching price do something like this, right? And then go lower. And what T-Trades is doing is he's waiting for the reversal to happen up here, the C2, and then he's waiting for the leg down, which is that expansion. And he's going to take that trade inside here, which usually is like the 50% level of that candlestick, and his entry ends up being right here. And then he'll take that trade to the bottom of the range, which is this. So his job is to capture this move here and go lower. Continuation trading 101. For us reversal traders, though, we're trading up here, right? We're trading way up here. And in here, we're looking for, liquidity sweep, breaker block, move down. Or maybe we're looking for the V-shape IFVG, right? So hope that makes some sense. See Iman's in the house. What's up, brother? We're going to be ending this thing soon, though. So if anyone has any other questions, feel free to drop them. Oh, you're okay, brother. Hope you're well. Me and Iman go way back. Just to let everybody know, inside Unicorn University, literally during the session, a lot of the conversation, a lot of the thinking, the thoughts, the charts, the conversation, I'm having inside of Unicorn University on the premium side, and I'm having it inside of the NQ thread. That's basically where I live. And Iman's one of our members out there, and I have loads of conversations with him. Good dude, and he's a fellow IFVG guy like me. So we have a great time. So does anyone else have any questions? Sorry, buddy. I'm feeling grateful. I'm feeling blessed today. And I'm just trying to pass on those things to all of you. All right. Well, sorry, buddy. I know you just joined, but we've been going for almost 2 hours here. And, I, once again, really appreciate all of you for sticking around. I know content like this sometimes is super dry. And then I know I had a lot to say today on the risk side of things. Feel free to hit me up by DM if you'd like to chat more. And if not, I hope you guys all have a great weekend. And touch some grass. For me, it's freezing cold. It's like minus 30 out there. We got loads of snow, so I won't be touching grass. I'll be touching snow. But I wish you a blessed weekend. Have a great time with your family and your friends. This is why we're doing it. Peace out, folks.